Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I do each and every week, I've left my lines on the chart, which are my forecast lines from last week's report. And as you can see, this diagonal line is what I drew at the close from last Friday. And we had a shortened trading week this week because of the Labor Day holiday. So this was Tuesday, Wednesday, Thursday, and Friday. And my forecast was that we would move lower to test this support level right down here. Not only did we test it, but we blew through it on the downside on super high volume. Now, again, this is my evidence to you, the investor, of how well technical analysis works as a forecasting tool. And if you've been following along with the market guys, I do this each and every week. It's not a magic trick. There's no smoke and mirrors. It's straight technical analysis in the candlestick format, which is what analysts have been using for many, many years. Candlestick charting goes back hundreds of years and can be traced back to the Japanese rice traders, which is how they forecasted the rice markets. So my forecast for next week is going to be very interesting because if you notice, there were times where the market had gapped down on significant volume and then the market continued to go lower. So what I think will happen for next week is I think that this downward momentum is actually going to continue in an effort to fill this gap down here. So I think that Monday and Tuesday we could go a little bit lower, and I'm going to forecast it this way, to fill that gap, and then I think we're going to bounce off of that support level. Is this going to be a complete recovery? No. I still think we're headed for lower prices, but I do believe that we're going to see a short-term bounce, and then we'll have to reevaluate the markets at the end of next week. So that's my forecast for the diamonds. If I go to the spiders, it's ticker symbol SPY, you'll see I put out the same forecast. I said that we would go lower, and we did. Dramatically lower. We gapped down on super high volume. This is one of the longest red candles we have had all year long, and that indication of high volume tells us that the sellers are extremely motivated. So what I'm going to do is I'm going to erase this line from last week's forecast, and I'm going to redraw what I think we'll see for next week. And right here, same thing like the diamonds, I think we're going to move lower and then possibly bounce at this level, because this level right here shows us that there's a role reversal support level that could very well hold. So again, initial part of next week I think we'll go lower, we'll look for the bounce, and then we'll have to reevaluate. For months now I've been talking about risk management and how to minimize loss and also how to protect profits. This is what we do at the market guys. We teach people how to read the charts so that they can make these calls for themselves and not have to rely on some analyst that you're finding on a financial program. So this is how you could make your own decisions and do it with great accuracy. Finally, if we look at the Russell 2000, this will be the last index we look at before going to the VIX. The Russell 2000 was the one that I thought would go higher before going lower. And again, there it is. I said that we would move higher early in the week. We did that Tuesday and Wednesday. On Thursday, we started to turn lower. And then, of course, today we blew past this blue line, which is the 20-period moving average. What I think we'll see for the Russell 2000, and by the way, this is much more significant, the Russell 2000 carries a lot more weight than the Dow does. I think the Russell 2000 could see another big down move earlier in the week and possibly press the support level right around 1200. So I think the Russell 2000 will go lower just like that, a little bit of a bounce, and then again we will reevaluate. Once prices start staying below that blue line, which again represents the 20-period moving average, there is no reason to take any new long-term long positions. This becomes a very defensive market when the Russell 2000 turns lower, because September and October are the most notorious months of the year. We have lots of data to support that, and so defensive measures need to be put in place to protect your money that's sitting in those brokerage accounts. Okay, let's talk about the VIX, which is ticker symbol VIX. I said that we would bounce off of a key support level, and I noted that for you right here. This support level on the VIX is what I drew from last week. I said we would move down earlier in the week and then go higher from there. That's, again, right to the penny. Yesterday's low touched at my pivot point. It does not get better than that, folks. And we have this massive rally in the VIX, which is a contrarian indicator to the S&P. I think the VIX could still go a little bit higher. We have a gap up here that will be tested, and then we have a secondary gap much higher in the market that I think could eventually be tested and filled. So I think we will see higher in the VIX to retest that line, and then a possible pullback from there. If it blows past that resistance, we're very much on our way to fill this gap up here, which, remember, if the VIX is going up, S&P is going to be headed lower. So I'm going to race this line down here, and I'm going to race that little line right there, and then we are going to be waiting to see how this all pans out for next week. Again, I'm very optimistic about the charts giving us clear signals, and if you want to learn more about what we do at the Market Guys, just go to the Market Guys website, click on the video tab right there, and you will have a whole library of information that we give away to you for free that'll teach you some of the concepts that I talk about each and every week. So have a great weekend, and we will speak with you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.